Well, let's talk about infrastructure. Last week, we heard from Fed Chairman Jay Powell noting that the U.S. economy could get a boost from infrastructure spending out of this pandemic. Hear what he had to say last Wednesday.
That's not our job. I'm just saying that is what fiscal policy can do that really monetary policy can't do, is invest in the future productive capacity of the economy, raise potential growth. Those things are completely tools that Congress has. And again, I wasn't making a comment at all on the current fiscal setting.
Always interesting to hear the Fed chairman say, we can't comment on that, but it would really help the productive capacity of our economy if there was more infrastructure spending. But for now, the private sector is getting more optimistic about infrastructure spending as we inch closer to the post-pandemic world. A report from the U.S. Chamber of Commerce showing that 36% of contractors expect revenue to rise in the next year. So let's get a pulse on why that optimism is building. And for that, we have Curtis Dubay. Here's the U.S. Chamber of Commerce Senior Economist. So Curtis, what is behind that optimism, and what does that point to for what the post-pandemic world is going to look like in the construction space?
Yeah, so thank you, Brian. I think that it points to the general optimism in the economy. What we saw in the index lines up very well with what else we've seen in other data sources. There's going to be a strong economic recovery, a boom in the middle part of the year, and contractors and commercial construction is picking that up, and it's reflected in the survey. But the survey also points to why that number might not even be even higher, because there are issues with getting materials for construction and with having an adequate workforce in construction. But again, I think it does reflect the high level issue of the economy is going to be very good for the remainder of the year.
Curtis, this is Emily. One statistic really stood out to me in your survey, and that was that tariff and trade concerns were actually up recently. You cited that more than 35% of contractors said steel and aluminum tariffs will have a high to very high degree of impact on businesses in the next 3 years. And that's up from 24% saying the same thing in the fourth quarter. And I'm wondering, as we're now in this new administration where perhaps concerns of tariffs were seen to be a little less of a pressing issue, where do those concerns actually come in for these contractors?
Well, I think it's a couple of things going on. One is that the tariffs are still in place. They need to be removed so we can get the price of inputs down, and that there are issues with getting supplies across the supply chain in all sorts of different industries, but particularly in construction, and that's driving up prices. And one of the ways that they could be alleviated would be by getting those tariffs removed, so that it would alleviate some of that pressure that's building up. But it is also tied some way to inflation. There's a definite expectation for inflation to be coming later this year, and we're seeing it's a little bit connected, but it's also separated, that prices are going up because of those supply chain disruptions. So I think all those things get mixed together, and it does become a concern for construction and other industries.
Now, you mentioned the labor aspect of things, that it's difficult and it's actually a constraint right now to not be able to find workers to get on these projects, even though the demand for those projects are there. The statistic, I believe, is that 85% of contractors said they were having difficulties finding skilled construction workers during this time. A bit unusual when you consider that we have 9.5 million people on the sidelines. So the disconnect is probably because of people are fearful to come back to work. But I'm wondering, what are the consequences of that for wages, for example? Are you seeing contractors bidding up the amount that they're willing to pay for labor to entice people to come on and work for some of these projects?
This is an issue across the workforce. Even with the number of openings, with 10 million people out of work, no matter what survey you look at, businesses are saying that they are having a hard time getting the skilled workers that are necessary for their jobs. And so that it certainly is putting up upward pressure on wages, because you can see, again, in all different types of surveys, businesses are saying they're going to be raising compensation to attract the workforce they need. But there's a lot of things going on. There's people who are not willing to come into the workforce because of concerns about the virus. There are people who cannot enter the workforce because they are at home caring for children and other loved ones. And then there's issues with immigration. We haven't been able to have people brought in to fill a lot of the positions that are there. And then there's a skills mismatch. There's a lot of people who are unemployed today who don't necessarily have the skills that businesses need. So we need programs to for skills matching, to get people the skills they need to get the jobs that are available. All these things are happening at the same time, but it's unique to have it when we have 10 million people out of work. Some of it will work itself out naturally, especially things with the virus, but the skills mismatch is something that will have to be addressed, as will issues with immigration.
And Curtis, looking ahead to that infrastructure bill that we eventually get, of course, we don't know any details right now. I'm wondering if you believe that there may be some major upside risk to the size of that package, because, of course, this was a different bill, but looking at the COVID-19 relief package that just got passed, a number of economists didn't think we were even going to get to that $1.9 trillion mark, and yet we did. So what does this potentially mean here when we think about additional fiscal stimulus?
Sure, we definitely need an infrastructure bill, but I wouldn't necessarily think of it as stimulus. This is something that the economy has long needed, and when we finally get the size package that results, that will be determined by the political state of play and just how much debt we're willing to accumulate going forward. But we absolutely have to have roads, bridges, and other infrastructure spending to support economic growth going forward. So I wouldn't think of it as stimulus. It's not something that's going to boost the economy in the immediate term, but it's something that's going to put us on a higher growth path going forward, and that's something we vitally need.
Yeah, Curtis, but at the same time, we've been hearing that it's infrastructure week seemingly every week since the Trump administration days. So what is the appetite on Capitol Hill to do that, especially when you consider if fiscal space is a part of it? We just passed $1.9 trillion in stimulus. So do you think that in a 50-50 Senate, that's really something that actually has the possibility of getting passed?
Yeah, I do. I think there's bipartisan support for a very large infrastructure bill. I think that's certainly something that can get through the House, and I think that's something that can get more than 50 votes in the Senate. If both sides of Congress decide to work in a bipartisan fashion, there's no reason why this shouldn't get well in excess of 50 votes and well in excess of 60 votes, because both sides want to see an infrastructure bill. They want to do the spending to put the economy on that higher growth path that I talked about. And it's things that we've needed for a very long time. So I think this is something that if they work in that bipartisan nature, that can get done, and it can get done before the 4th of July. That's what we want to see. We want to see a bill passed. We have a program called Build by the 4th of July. And if they come together and get to work, that certainly can be done.